The topic today I want to get into is portfolio design. Now, Matt was mentioning oil, and I think oil is a perfect, product to discuss this in because there's so many different ways you can trade it. For example, if we take the ETF USO, and Matt, here in your toss, why don't you go from your margin to your IRA account? And let's actually just talk about. Why don't you build me an order on this one, Matt? You can do it right from the chart if you want. Either way. So, Gino, in an IRA, what role would you give people direction on how to place something like an ETF and whatnot? And then we'll get into the question how many shares is appropriate. But let's start with that.
Well, for IRA specifically?
Yeah, IRAs, Roths, traditionals, long-term accounts, conservative accounts, any form of what I call a growth account or a long-term account.
The reason I like it is in your IRA or a lot of retirement accounts, most brokers only let you go long, meaning they can only buy and you play the upside. They don't let you short. They don't let you use margin, and they don't let you use certain strategies as far as options and stuff. What most of them do is they allow you to do covered calls and cash secured puts. So I like ETFs, number one, because they don't go bankrupt. And if it's your retirement account, you don't want a lot of risk of it going bankrupt. You want security, especially the older you get. You don't want to take as much risk. So
now you're getting a couple of requests here, Gino, from Annette and Debbie real quick. Thanks for letting us know, ladies. Up volume. They're saying you got to speak up down there in Southern California.
Yeah.
If you tweaked your shoulder, maybe you don't have the energy to speak up. Are you laid up in bed here, Gino?
No, let me push my wheelchair closer. Hang on a sec. Got a little joystick on it. I have to move it with my mouth. Hang on a sec. There we go. Okay, so yeah, the ETFs do not go bankrupt. They're not as volatile. They're going to be there. And what I like about the ETFs is they're a mutual fund, basically. And they're comprised of different stocks and different sectors, you name it. And what I'm going to do here is, like on USL, I'm going to pull up, if I might, right here, a little gift for you guys. This is something I've been doing for years for people trying to build a portfolio. Why don't you go ahead and open that up if you would? Does that matter, Tim?
Yeah, I'm getting it.
That's Matt.
This is just a basic guideline. It's not advice. This is a portfolio design sheet I give people, especially like if you're in, for example, a retirement account. How much weight you're going to put on your portfolio? It's like, here's my portfolio. You see it's bolded ETFs. Notice I put that first. Why? Because if you're a brand new trader, why speculate on a number one, like Matt said, stay away from leveraged products. They're too volatile. You got to be on your toes. There's a lot of rules behind them and stuff that we don't know about. Then if you get into equities, okay, they're the next step down. Not as volatile as the leveraged ones, of course, but they can go bankrupt.
Real quick, Matt, while we got that file up there, go ahead and tap that TT portfolio design as well. So last week, this is perfect, Gino, perfect timing on this. Because that cheat sheet you have combined with some of the directions in this PDF that I had Jessica put into this stylish PDF, I think could really help people, guys. Would you guys want to use these things?
I hope so.
I mean, I would hope so, yeah. So many of you should have emailed me independently. If you don't have a copy yet, get the file here. This should help you, right? Go through the PDF. It gives you some instructions on how you want to kind of, hit the high-level points of how to build a portfolio. And then, Matt, let's go back to Gino's cheat sheet there for a minute. And guys, if you haven't got the files yet, we'll bring them back up in front of you.
I was on a preview of another company that's online and trading company. There's thousands out there, guys. They were charging a lot of money for stuff like that.